Hello and welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we talk all about markets and fundamentals. Well, the markets are at record high levels, and how do you really approach these kind of markets? Where is it that your money is the safest and will give you the maximum amount of returns? We'll discuss all of this with a very special guest who's joining in. I have with me Mr. Kranti Batini from Wealth Mill Securities on this edition of Market Meter. Mr. Badini, good afternoon, and thank you very much for taking out time for us. Well, new high for the Nifty again today, 16,360 has been crossed for the Nifty intraday. So we have another new level. The markets are running high. Of course, there was a 2 days kind of a blip that we saw, especially with the kind of heavy sell-off that took place in the broader market space. But of course, after the clarification came in from BSE, things started to recover. How are you looking at the markets at these levels? Do they look extremely stressed, or do you still believe that the underlying trend is still positive and investors can still invest in equities?
Sakshi, overall, if we observe the market trends, markets are in a positive zone. And in fact, we have to say markets have climbed the wall of worries. And today we are at an all-time high again, despite of last 2 days clamor in mid and small cap stocks. But investors always need to have a thumb rule right now. They need to stick to quality, need to avoid the buzzing or momentum stocks where the valuations are quite expensive, and also there is no earning clarity. Now, from here onwards, the divergence, the gap, valuation gap between the mid and small cap is bit narrowing down every day. So at present, I can see large cap stocks are more attractive than a mid cap stocks. So investors need to have that balance between the large cap as well as the mid cap stocks in their portfolio. Portfolio redesigning is extremely crucial at this point of time at the current market juncture. And investors, wherever they have excessive profits in their portfolio, they need to book some profit and stay on cash to go for the quality ones. For example, if we are growing any plant, we can't avoid the weeds in the plant, okay, in a garden. So the weeds will come. So when we are designing a portfolio, knowingly unknowingly some weeds will come, some unquality stocks will come into the portfolio. So this is
Yes.
the time when the world is in a complete euphoric mode. Okay, that is the time you can exit those kind of picks at this point of time and stay and stick to the quality at this point of time. And going ahead, markets will be in a positive zone. Investors can stay invested in these markets.
Absolutely. So the markets can, investors can stay invested in these current markets, which are at record high levels. But definitely, some portfolio redesigning at this point in time is extremely crucial. Take out some of the weeds off your portfolio that have not been doing too well, and this is the time when markets you can actually get the opportunities to exit non-quality and just stick with quality so that you can ride the wave in the best possible way. In the particular sectors that I wanted to ask you, the metals have actually tried, again outshining the markets from last 2 or 3 odd sessions. We have seen a further push in this segment again. Are you still positive on this sector, or would you say that the time has come to actually take some profits off the table here as well?
Sakshi, one need to check their individual portfolio.
Yeah.
For example, if they entered for a 20-30% gain in a metal stock, if they are sitting at 100% gain, it's better to go
Yeah.
and book profit on the table. It's all depends upon the entry point they made. But there is still some stream is left in metal pack. The construction activities going to happen in a much vigorous way in the days to come as the unlocked trade is concerned in India, and
Sure.
also as the global uh, growth is coming back. So the metals are going to do extremely well in the days to come. There can be a possibility of the super cycle, but investors need to be very cautious with respect to their entry level into the metal stocks. But if they already entered in the beginning of the cycle of metal stocks, they can book some profit from the table. Stocks like Hindalco and most of the stocks, they have witnessed a humongous rally in metal pack is concerned. Probably investor can book some profit from the table at this point of time.
Okay, understood that. The only one sector which is perhaps feeling the pinch today and from yesterday, and that is the pharma space. Of course, there have been some earnings pressure from those companies like Lupin that have seen some US sales pressure coming in. That has dragged the stock 2 days in a row. Cadila has been down because of some US pricing pressures as well. How are you looking at the entire pharma space? Of course, this was one of the most preferred sectors of analysts, over the last 1.5 years because of the COVID-19 theme. We have been speaking about the healthcare space as well. People have been saying it's a long term story. But how do you see the current pressure that there is? And is there any sign of caution that you would want to highlight for all the investors?
Sakshi, going ahead, the pharma sector will witness a humongous rally. Going
Okay.
ahead, what we are going to witness in pharma sector is there will be a stock-specific rally,
Hmm.
stock-specific movement with respect to pharma stocks are concerned. What we can say is investors need to act stock-specific at this point of time. We are bullish with respect to pharma is concerned in the longer term basis, but
Hmm.
medium term, the if we compare the earnings with respect to the valuations in the current trend, stocks valuations little bit structured expensive at this current juncture, but
Hmm.
it's not going to be a broad-based rally with respect to the pharma stocks are concerned. Probably there may be some pause with respect to some certain stocks, but overall there will be a rally in pharma stocks. Investors need to be uh, stocks selective in terms of the picking up pharma stocks are concerned. While
Okay.
coming to the earnings season are concerned, pharma stocks are going to be in a highest visibility in terms of their earnings are concerned in next couple of quarters. But wherever the valuation froth is there, that readjustment will happen during this phase.
Okay, understood that as well. Let's now move on to talking about some of the stocks that you've recommended and have done extremely well in the past for all the viewers who have actually taken a bet on your recommendation. One of the stocks is actually related to the pharma space, and that is Piramal. You had recommended this back in, say, January, and from that time until now, there has been very sharp spike here, and that's what you have been hinting at, that you need to stick with quality that will definitely perform despite any kind of corrections. And that's what we have seen. So, congratulations to you on that. Help us understand your current view on Piramal, and for all those investors who had invested are sitting on good amount of profits, what should they do?
Sakshi, with respect to Piramal Enterprises, the stock is concerned, we advised on your show on 27th Jan, way
Yeah.
back in nearly 7 months back. So that time, the stock was, there was a lot of lull in the stock. But what we expected is, if we understand the business model of Piramal Enterprises, they have a natural hedge in the business model. 50% revenues comes from pharma sector, 50% revenues comes from the financial services, particularly from the NBFC. Of course, the NBFC sector was under pressure from past 18 months. So there was some pressure with respect to their earnings are concerned. But what we believed is the quality of the management, and Pyramil have proven whatever be the new segments of business they enter, they have strong and they have proven strong earnings traction in terms of the new segments of business is concerned. That was the only reason we advised Piramal at 1420 on your show way back. But today the stock is hovering around 2700 after touching a high of 2850
Yeah.
levels. So at this point of time, because since the markets are trending at a higher level and the stock has delivered 100% returns in past 6 months, investors can just trim their portfolio, just take 25% of profits from the table at the current juncture, and remaining stay invested. And any dip in the stock, they can re-enter the stock and accumulate the stock further at every dip. One thing we need to understand is we listen a lot of multi-baggers are coming into the stock. Stocks have been multiplying, but Pyramil, for a matter of fact, when we advised the stock was the market capitalization was around 20,000 crores. Today is around 45,000 crores. So that is the kind of wealth Pyramil enterprises have created for the investors during this phase, and with a high liquidity, the even a big HNA investor can easily he can enter into the stock and he can exit the stock as and when they require. It's a highly liquid counter. Most of the stocks what we come across is when we are buying there will be shortage of stock, when we are selling there will not be accurate buyer for that particular stock. So but these are
Right.
the quality companies. Whenever they comes into attractive valuations, low hanging fruits. Investors can jump and pick into their portfolio.
Absolutely, 100% plus return over here. So, all those investors who had invested back in January, they must be sitting on extremely handsome profits right here. You've got the advice on what to do now, too. The other stock that you had recommended on our show as a star pick is ABB Power Products, and this stock also has given handsome returns to investors. Help us with your view on the stock currently. What would you say?
Sakshi, ABB Power Products is concerned currently. It's called as Hitachi ABB Power Products. They are into power infra projects. And what the piece of business I like in this company is they are going to venture into power infrastructure and also the electric charging power infrastructure with respect to the four wheelers, with respect to
Mhm.
commercial vehicles are concerned. It's a very niche business they are entering in, but going ahead, government emphasis will be there on the power infrastructure and smart cities are concerned. So this business model is going to do well once the unlocking trade happens fully and the economy back into recovery at the ground level. So we advised ABB power products at the range of 1300, and currently stock is trading at 1800 range. The stock have given a peak return of 70%. Any dip in this stock, investors can accumulate the stock at every dip in their portfolio. Those
Hmm.
are already bought at 1300, they can stay invested and accumulate the stock at every dip. One thing,
Okay.
the beauty of this stock is the pedigree of the group, the pedigree of the company is highly high quality stock, and also completely uh, the the strength is there, inherent strength is there in this company. So investors can use every dip in the stock to accumulate in their portfolio.
Okay, so buy on dips on ABB Power Products. Still substantial upside can be seen from here on the current levels too. And now for the latest pick that you would want to recommend to all our investors and viewers, which is the sector that you've picked out a new stock from?
Sakshi, we are going back to financial sector again. Centrum
Okay.
Capital is the advice for the day for investors. The stock was consolidating in the range of 50 to 45 range. There is some adverse impact of yesterday's circular on the stock also. Uh, of course, whenever these kind of the bumps come into the stock, okay, I mean to the speed breakers comes into the stock, the new circulars that comes from exchanges and SEBI. If the stock is highly quality, investor need not have to worry about what the measures regulators are taking. Always
Sure.
regulators will take the measures with respect to benefit of the
Definitely.
overall health of the market. So
Sure.
we are not bothered about what the buzzing things that are happened last 48 hours in the market. When the stock has a quality and the stock has a juice, investors need not have to worry. So
Yeah.
Centrum Capital go is comes from that kind of category. So investors can accumulate this stock at every dip. The company is headed by Mr. Jaspal Bindra, who was the Asia Pacific head for Standard Chartered Bank, and he was instrumental uh, democratizing and running the business for Standard Chartered Bank in India,
Sure.
expanding the bank and making the bank India's largest foreign bank in India. So
Right.
currently he is at the helm of the affairs in Centrum Capital, and as the financial services business, uh, they are going to launch in terms of their NBFC and the banking license they are going to get. The company is in a better position to deliver high quality returns in next 2-3 quarters. Of course, in the meantime, there will be some pressure with respect to their capex and in terms of their fund infusion with respect to the new banking licenses
Sure.
concerned. So, but investors with a longer term horizon, definitely they can buy uh, Centrum Capital at this juncture, and they can accumulate in their portfolio.
Okay, understood that. Well, on that note, I'd like to thank you very much, Mr. Batini, for sharing with us all these wonderful insights on the markets, the strategies that investors must follow, and not bother too much about the kind of volatility that is coming in due to some kind of exchange-related circulars, and just stick with quality and go for all the stocks that you've recommended to. Thank you very much. Always a pleasure speaking with you.
Thank you,
Let's now
Sakshi. Pleasure to speak to you.
Thank you. Let's now move on to see how the markets are really trading at this point in time. Well, over half time, and you can actually see the markets are really zooming ahead. In fact, new record high is what we have seen in today's trading session for the Nifty. It's 16,360 level is what we have really seen today. Apart from this, if you see at the other exchanges, the other indices as well, as far as the BSE Sensex is concerned, 54,763 is the current level for that. 237 points or added, and it's trading at about 0.4% of an uptick at the current moment. Now, when we talk about the Nifty Bank also, that's also inching higher, 35,877, the current level. 0.20% of an uptick is what we can see on this index as well. But however, when we talk about the broader market indices, you can actually see sharp recovery really taking place as far as the small caps are concerned. Over a percent, over 1.5% kind of an up move is what we can see here. For the mid caps too, it's a 0.8% of a rally that we are seeing at this current moment for the small mid cap index as well. The volatility index is also slipping away. It's trading at about 12.6, so that's a comfortable zone, and gives a lot of comfort to all the investors and advisors at the moment too. Let's also move on to see how the sectors are really performing at this point in time. Well, barring the pharma sector, it's all green, and it is being led by stocks from the IT space. 1.4% uptick in the IT space is what we can see. The PSU banks are rising over a percent higher as well. Apart from this, it's the realty space that is shining bright too. The media stocks, metals, all of them are performing well. 0.2% uptick for the auto space as well. The financial services are following in tow as well, and the FMCG space is rising up higher as well. When we talk about the gainers and the losers as well, you'll be able to clearly see it's the IT space, the mid cap IT space. The entire space is buzzing again. Tech Mahindra, top of the charts, 3.5% uptick being seen there. Power Grid, Tata Motors, Hindalco, L&T, all of these stocks, in fact, are up in the green, 1.5 to 2.5% higher. Tech Mahindra, remember, in the morning show, Mudit Goyal had given a buy recommendation. The targets have also been met, and in fact, the stock has moved up higher as well. For the laggards, if you talk about, it is some stocks from auto space like Eicher Motors, from the banks like SBI, IndusInd Bank, Divis Laboratories is down in trade, and ONGC is also dragging the markets lower in today's trading session. Apart from this, overall the markets are pretty healthy as far as the index is concerned. It's at record high levels. What should you be really doing, and how should you position your money? All of this will be discussed all across our platforms, and for that you need to like and subscribe to our YouTube channel. Hit that bell icon so that you can get to know whenever we put out a new video for you. Also, stay connected with us through all our social media platforms and visit our website money9.com for much more on markets and on personal finance. Thanks for tuning in.